Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, unfortunately, we had a very large red day in the SPY and the QQQs. It was once again a day of volatility driven by economic headlines, anything from export restrictions to tariffs and a lot of things in between. Now, number one, this morning, what happened was NVIDIA getting caught up in some headlines as well as its semiconductor peers, as we had two pieces of news. One had to do with export restrictions, President Trump's administration putting a flat-out ban on over 80 different Chinese companies in terms of exporting semiconductors towards those companies. Number two, of course, we had news from the Financial Times that China was doing their own version of a crackdown on the energy efficiency of certain AI chips that were coming into their country. That did not bode well for the semiconductor index, number one, and led to a lot of declines in some technology-heavy names. Number two, which happened after the close, which was hinted at this morning, was tariffs on automobiles, 25%, which was confirmed after the close of the bell today, but was hinted at very early in the stages of this morning, which led to a lot of volatility in the markets overall. So as you can see, guys, it was a very volatile day across the board in terms of headlines, which we will get into, but we had kind of been predicting this only using the technicals, right? Having a nice rally on the SPY into big resistance and into big resistance on the Qs as well. And when you knew that the bears had full weekly control, you were anticipating that any negative headline was to be a rejection factor at those areas of resistance. And we were also keeping a very close eye on our rotation, right? Yesterday, the title of the video was Big Tech Rotation. Is it a good time to buy or is it too late? Well, I was kind of hinting at all of yesterday's video that if you were swing trading, it was kind of too late for the big tech names. The rotation was already happening, but where was the rotation lacking, guys? In the same sectors that were up today. Consumer staples were at lows, very interesting trade. Utilities were also kept relatively close to lows. Real estate as well, very close to lows. And energy just being in a seasonal uptrend right now, that was also potential plays. The only plays that I fired off early this week was not chasing big tech to the upside for swing trading. My plays were on Pepsi and Lockheed Martin, two fantastic companies that had hit their most recent lows, part of the value rotation trade, arguably, and those did perform quite well, but I was not chasing big tech for swing trades. Now, if you have a long-term portfolio and looking to DCA into a lot of these fantastic companies in big tech, well, it's always a good opportunity with every single paycheck to continuously dollar cost average and build your long-term portfolios for the future. So that's the discrepancy between the swing trades we were looking for and the long-term portfolio positioning that I was talking about in all of the videos over the last 2 weeks. So in today's video, we got a lot of things to cover together, of course. Number one, we're going to be going over these two headlines. First, take a look at what happened with semiconductors today, do a deep dive into the two parts of that news event. And after that, of course, take a look at what just happened right now on the auto sector for the 25% broad tariff across all cars not made in the United States. After we are done with those news catalyst headlines, we will go through our technical analysis, see where we stand after this big one-day drop on the SPY, the QQQ, and the minor sectors as well. Thereafter, take a brief look at technical analysis on our major big tech names, and they came down a lot. Are they still in daily uptrends? Are they still looking good for swing trades in the near-term future or long-term portfolio positions? We'll get into that, of course, in a later part of the video. And that's going to be it for today. So it should be a very nice one. Let's jump right into it, shall we? So the SPY up 1.19%, the Q are up down 1.19%, the Q's down 1.84%. But as I hinted at in the introduction, it was a game of rotation today. All the big tech names that were outperforming in the last roughly week and a half of trade, now they are the ones being unwound. The semiconductor news definitely hit them hard across the board. And what performed well? Well, arguably the entire rest of the market. Financials not cooperating too much. Healthcare was mixed. Eli Lilly bringing the sector down overall, but a lot of names in healthcare did not perform too poorly today. Consumer defensives having a little bit of rally after being muted for the last week and a half. And even down here, right, the bottom half of the market not performing too poorly. A game of rotation is being played as we rotate from value to growth. Whichever sector gets oversold, any little headline, positive or negative, will turn the tides very quickly. Very difficult market, guys, to be swing trading in overall. But if you're building a long-term portfolio, you must be loving a lot of the discounts we've been having over the past month. Taking a look at the one-day relative performance, you can see all the sectors that were red yesterday were green today. Defensives, energy, real estate, and utilities. And to the downside, of course, led by technology and communication services. And consumer cyclical because of the worries about possible economic slowdown. On the 1 week relative, guys, while we still remain somewhat balanced, several sectors are up. Consumer cyclicals still somewhat up. Communication services, energy, and financials, and to the downside, led by healthcare and utilities. So you can see on a 1 day basis, you can clearly see the rotation. On the 1 week, the view of the rotation has not quite fully been unwound yet, as a lot of the names, guys, even the tech names, even the QQQs, we are technically still in the context of daily uptrends, looking for higher lows. We always need to remember who's in control here. The weekly bears still have a lot of momentum and a lot of possible volatility catalysts on the horizons as well, such as April 2nd, aka Liberation Day, aka Reciprocal Tariff Day from the United States towards the rest of the world. As you can see here, the futures are bleeding in the after hours now once we got that tariff announcement news, an additional 0.3 on the SPY and almost 0.4 on the NASDAQ. So we will take a look at that in a little while. Now, first off, let's dive into the tariff news, or rather, let's dive into the semiconductor, export ban and then China energy efficiency regulations news. So number one right here, NVIDIA and other big chip stocks slide as investors see big risks to sales in China. This was coming out very early this morning, guys. This is part number one, yeah? So shares of NVIDIA and other chip makers were sliding Wednesday as investors got more nervous about their China business in light of new export controls in the US and fresh worries about environmental regulations in China. So two different pieces of news hitting semis really hard today. On Tuesday, the Trump administration added 80 Chinese companies to a trade blacklist, citing national security concerns. Now, this was not started by the Trump administration. Well, not this time around. They started back in the first Trump administration, were then maintained and amplified by the Biden administration, and now we're getting more amplification for the Trump admin number 2. These included Inspur, Chinese largest server maker and buyer of NVIDIA, but also affected companies such as Intel and AMD, which also do have decent business sizes in China. NVIDIA getting ensnared in the US-China trade dispute is a negative development. Well, that is for sure. NVIDIA's fiscal 2025 revenue in China was about $17 billion, including data centers, automotive, and networking. He estimates China data centers alone contributed about $12 billion. That's a lot of money, guys. When you take a look at NVIDIA, we know they're making a ton of money just last year, right? If we look at this year, the forecast, we'll see what happens, yeah? But the forecast for this year is they're going to make roughly about $200 billion. So 17 billion total China. I mean, they're not going to lose all of it, right? But 17 divided by 205, that's still like 8% of revenues. That is a very large amount, all things considered. China is an important market, of course. China contributes about 5% of the company's earnings per share. And as we just calculated, 8% of revenue. Still, China fears are hurting NVIDIA's narrative and stock multiple. So unfortunately, NVIDIA getting caught in the crossfire as several of their chips are big players in the Chinese markets. And piece of news number 2 against NVIDIA, released from the Financial Times just this morning as well. NVIDIA's China sales face threat from Beijing's environmental curbs. This is kind of an indirect jab, an indirect retaliation factor at what the Trump administration and the Biden administration since have done in terms of exporting AI chips towards their country. Beijing has introduced energy efficiency rules for the use of advanced chips that would prevent Chinese companies from buying NVIDIA's best-selling processors in the country if implemented strictly. The H20 chips, less powerful than the top-range graphics units, but tailored to meet Washington's export controls, currently fail to satisfy the Commission's new rules, according to the documents. For several months, the Chinese regulator has quietly discouraged the country's tech giants, such as Alibaba, ByteDance, and Tencent, from purchasing H20 chips, said 2 people with knowledge of the matter. However, the rules have not been enforced strictly and are yet to dent China's sales of H20 chips, which remain in strong demand. But the implications are stark if the Commission decides to enforce the ban more tightly, creating a threat to NVIDIA's $17 billion a year business in the country. As China rushes to build more data centers, the U.S. chipmaker risks losing orders to domestic rivals such as Huawei, whose offerings better align with Beijing's green agenda. Of course they would, but then again, they are aligning with their own national interests, right? In the face of these continuous U.S. export controls. Beijing has pushed local companies to be less reliant on the products of foreign groups such as NVIDIA, which makes the GPUs crucial to developing AI models. To deal with the threat, NVIDIA has prepared a solution to make adjustments to the H20 chips to meet the NDRC requirements, said one of the people familiar with the matter. But such technical changes would reduce the chip's efficiency and hurt its competitiveness in the Chinese market. So NVIDIA really being caught between a rock and a hard place right now. They can't give them the best chips that they have to offer because the US won't let them. And then if they try to make them more energy efficient for the Chinese market, well, then they become even less efficient versus in-house competition, or rather national Chinese players overall. Very tough place for NVIDIA to operate within. The H20 chip is NVIDIA's flagship offering in China and was approved for sale after the US tightened export controls in October of 2023. And lastly, tech powerhouses from Alibaba to Tencent increased their orders for H20 chips aggressively this year after DeepSeek's launch of its efficient reasoning model led to an AI boom in the country. So the chips are still in high demand, but for how long? And will the tweaks that NVIDIA is bringing, will that hurt the ongoing demand? Well, we will follow this story as it evolves overall, because it is indeed 8% of NVIDIA's current revenue and 5% of their earnings per share. That could definitely hurt. Good thing right now that NVIDIA is not trading at an extremely expensive multiple, but it has been challenging for NVIDIA, guys, at least almost over the last year, as they constantly deal with the push and pull of these export control narratives, right? So that's everything for the NVIDIA and chip sector news, which saw players like NVIDIA, Broadcom, AMD, Intel, a whole bunch of players down today. It's been very rough times for that sector as of recently, despite the fact that most of all those companies are growing revenue and growing EPS. Just goes to show you how cyclical and how affected those companies are from trade relations. Number two, of course, we have to talk about the Trump auto tariffs, right now announced 25% on all cars not made in the United States. He said Wednesday he would impose 25% tariffs on all cars not made in the US. Now, this means that if you are, let's say, Volkswagen or Toyota or Honda, and you have a plant in the United States making cars there, well, those cars will not be affected by these tariffs at all, right? However, if you import cars that are all made as finished products from other countries, those cars are all subject to the 25% tariff. Trump said there's absolutely no tariffs for cars that are built in the US, of course, as I just explained. The White House aide Will Scharf said that the new tariffs apply to foreign-made cars and light trucks. Scharf said the tariffs will result in over $100 billion of new annual revenue to the United States. And you can see that vehicle imports as a percentage of sales in the US are quite large, right? Now, the vehicle sales all over, right, 53%. They're comparing, nice little table here, comparing and contrasting between 2019 versus 2024. Yeah, trying to, have a bit more reliance on domestic manufacturing for those automobiles. But we know that there's always a trade-off, right? The trade-off is it's more expensive to make them in the US. At the end of the day, that does translate to higher prices for the consumers overall. Now, the European Union will also seek to find negotiated solutions while safeguarding its own economic interests. More developments on that next week when we get a whole new suite of reciprocal tariffs. There will probably be some negotiations for the next 30, 60 days around this automotive deal as well, but also surrounding possibly other products that may be affected. The auto stocks fell in after-hours trading following Trump's announcement. GM, Stellantis, and Ford all roughly lost 5% in extended trading. And when Trump was asked earlier today, he said earlier Friday, he said there will be flexibility on some of the tariffs. And Tuesday night suggested the duties will be more lenient than reciprocal. Treasury Secretary Scott Bessent said last week that countries can pre-negotiate with the U.S. to avoid facing new tariffs on April 2nd. And when Trump was asked later today in the press conference, it's not in this article, but he said, would you be able to possibly remove the auto tariffs? He said, no, 100% permanent. So we will see whether he stays true to his words or whether he will also respect his leniency comments from the other day. One thing's for sure, right? At the end of the day, this all leads to increased volatility in the markets and increased uncertainty towards consumers as well. Because at the end of the day, the consumers, although companies do take on a little bit of those price increases, consumers, of course, pay the bulk of those price increases as a result of those tariffs. So those are the two pieces of news that are currently affecting us right now. The automotive news, guys, should not be much of a new factor for anybody right now. Trump hinted at these all of last week, and additionally on the Monday session as well. It was just a question of time. However, the market reacting to them, just maybe because the market didn't think he would actually do it, but he has been talking about it firmly for the last week. So I've been preparing for this one as well, right? Which is why this week, when I presented my portfolio on the Monday session, I'm saying I'm not really going to open any more trades, guys, this week. And if I do take some trades, it will largely be on value. I did nibble on a little bit of an NVIDIA position today. during the drop. But most of my plays, I mean, 3/4 of my plays this week, guys, one of them was a put wheel option on CP after the drop yesterday. Value play, right? The other plays that I took was Lockheed Martin, value play, arguably towards the lows as well. And the other only play that I took earlier this week was Pepsi, also arguably at the lows. I'm looking for value names, yes, but value names who have not maybe rallied as much of the other value sectors out there, right? So that is just a quick little summary of all the news catalysts from today. Now let's jump into some technical analysis, shall we? So, taking a look at the SPY, guys, in terms of the broad market right now, we are still currently sitting in fear conditions. We've been fear or extreme greed, or extreme fear rather, over the past month worth of trading as market momentum still remains extremely weak. Sectors cannot truly fire off on all cylinders. We constantly getting this rotation between tech value, as retail and institutions also try to, parse together through the Trump administration's new comments, new policies, and try to adjust in real time. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange is still at very extreme fear conditions. And stock price breadth as well still remains a bit of in an extreme fear environment, even though we have seen a very nice rally in the broad market over the past 2 weeks. The percentage of stocks above their 20-day recovering to 48%. Not at the lows we saw a few weeks ago, but still, right? Not even towards the highs. I would not be surprised if we get a few more red days. It's going to come right back down here very quickly. Percentage of stocks above their 50-day moving average. Here's where you can see the pain still remains, right? Percentage of stocks above their 20 just means we got a very quick move. A lot of stocks recovered early pain losses from late February into early March. As you can see, the percentage of stocks above their 50-day moving average, the damage on a lot of stocks was so sharp that now even this bounce is not taking them above their medium-term moving averages, which is why it still stays put at about 31%. Still a fantastic overall buying opportunity if you're a long-term portfolio investor looking to shop for some of the highest quality ETFs or highest quality individual companies in the world. Moving on to percentage of stocks above their 200-day, same concept, right? Big flush down on the markets, little bounce, but the 200 for a lot of stocks is still sitting above the current market conditions, which is why we're currently still sitting at some of the lows of the move, 41%. So you can see market breadth, although has recovered on the shorter term timeframes, not so much on the longer terms in terms of reestablishing big trends. And that's going to be the moral of the story leading into this technical analysis portion of the video, yeah? We are on a very nice 2-week bounce right now. Daily uptrend was good, but I was telling you guys, beware of overhead resistance. 585 to 575 clipped into it early this morning. Then with any negative piece of news, guys, we are right back down, barely holding the 200-day EMA. The SMA is a little bit higher if I were to plot it, but this one barely holding the EMAs right now. Looking for a higher low still. Anything above 558, looking for a higher low for possible early daily uptrend continuation, because the bulls still have the daily uptrend, and below us is support 565 down to about 560. But keep in mind, guys, if you lose this daily uptrend, right? How high was the bounce on the weekly? Not good enough. And I've been talking about this for the last week. I was saying if you get a bounce is good. It's step number one, but the bounce needs to be high enough on the weekly to give the bulls a chance to reset into a weekly uptrend. But now with the April 2nd tariff deadline coming up, a lot of volatility, and the bears putting in a stand right now at the 38.2. If we get a loss of the daily uptrend into daily downtrend, it's not going to look pretty. The bears have a good chance of cracking back to the lows or maybe even lower. We'll take this one day at a time. Right now, it's a battle between two time frames. The weekly bears, which are very powerful right now, and the daily bulls, which have put in a lot of work. Can they maintain this to the upside? We will see. We'll take it one day at a time. But one thing is for sure, guys, I'm not in the business of chasing these markets. I would rather wait for a recapture of daily oversold conditions before I commit with any size for any respectable swing trades. Moving on to the QQQs, same concept, right? Daily uptrend is nice, but getting rejected exactly at the resistance range, 500 down to about 494. I was saying, guys, it's a very big level, right? Very big level. So beware any negative headlines that could come out going to affect us. We're now back below the 200-day EMA, but above support 483 down to 468. Still in a daily uptrend, looking for a higher low. Anything above 472 would be looking for a higher low, but take back too much and set the daily downtrend. And you know what's going to happen, guys. This bounce on the weekly on the Qs is just not good enough, right? Take a look right here. It was only a 38% bounce into resistance. You lose the dailies, you are going to head for possibly leg number 2, which could see a retest of these lows or maybe even lower below. We will take this one day at a time. But I was warning everybody, be very careful of your position sizing leading into April 2nd, which is why when I gave the Monday update on my positions, I'm saying I freed up so much money. I have so much buying power. I'm not going to commit to any sizable positions before April 2nd and maybe all the way through next week. As the markets move through volatility, it's a great time to be building long-term portfolios, which I have been doing on the channel as well, just slowly nibbling and DCAing into long-term positions. But for any swing trades, pay special attention between the rotations of tech and value. Probably not the best opportunity to start buying tech right here. If you didn't buy it down here in daily oversold conditions, yeah, you shouldn't be buying it into here, into resistance, knowing the weekly bulls are still there and can shoot you right back down, right? So pay special attention, buy sectors. If you're looking for sector plays, buy them when they're low, right? If tech is running, not a good time to play tech. You should be buying here on possible consumer defensives, utilities, and everything in between. And then when tech rallies and gets short-term overbought conditions on the hourly timeframes into big daily resistance, well, maybe you want to take some of those tech swing trades from down here off the table or write covered calls with a lot of time on them, and then possibly pivot for the new rotation just on a technical basis. Moving on to XLF financials, also clipping into resistance today, 51.38, down about 50.74. They were down about 0.3 in the regular session, 0.74 in the after hours. So this was one very clean, nice move to the upside. Daily downtrend, healthy daily bounce. Now the bulls will be looking for a higher low. Anything at this point above 47.24, looking for that daily higher low for possible further trend continuation. Not looking too bad, but overall, it's going to be a very choppy market for financials. Resistance stays put above us, and the bulls are looking to get this weekly uptrend back. Now, the financials bounce was fairly better than a lot of other sectors. It was a 618 bounce. So the financial bulls do have an opportunity here to possibly set some higher lows and go for a daily trend change. We will keep watch on this one day at a time. Support stays below us, 48.31 down to about 46.80. And financials is the same thing, guys. Do you think I want to buy financials into resistance after a 10+ day in a row rally? Or would I rather wait for a retest of the lows, looking maybe for weekly higher lows with a better entry, stop loss goes below there, and then you're targeting the highs? That's probably a better proposition, right? So be patient on your swing trades. You'll have more than enough opportunities to pick stuff at their lows of weekly moves or daily moves, right? So no need to chase certain sectors, especially not in this market. Moving on to healthcare right now. Healthcare down about 0.36, another 0.27 in the after hours. And the weekly timeframes, guys, are not looking the best for healthcare. I was saying that this is possibly a swing trade for a short coming to this level, right? Daily downtrend into the highs, failure to break, and now the rollover. It was a short entry over there, just as a back test of resistance. And the weekly as well was a weekly engulfing move, uptrend, yes, engulfing move, back test, and possibly run to the downside. We will see. But if that does happen, below support is 140 all the way down to 128, a very, very large level in the past 2, 3, 4 years. It's going to be very tough for the bears to get through this one. But if you're looking for healthcare as a defensive sector and it gets brought down in the next few weeks, look for some companies, some of your favorite healthcare companies, insurance, healthcare insurance companies, medical equipment providers, right? Because we know pharmaceuticals can go either way. They're just too beholden to any FDA approvals, government import or export restrictions and stuff like that. Pharmaceuticals is not my best or favorite segment of healthcare. My favorite segment of healthcare is medical equipment distributors or health insurance providers. Two things that are kind of like evergreen markets, right? Moving into SMH right now. SMH getting hit with those headlines again. I was saying, you know, daily uptrend is nice, but no new highs as well, right? So the daily uptrend, they had it, and now, unfortunately, they have lost by flushing the lows. So now, no new highs, right? No new highs closes, and now into lower lows. Well, unfortunately, guys, this is synonymous with a daily downtrend. It's very choppy. We're still in support, 233, down about 218. Not looking the best, though. It was a weekly downtrend, and I was saying the size of this bounce in terms of the weekly bounce was not good enough, and as of right now, it's still not good enough. 38.2, 40% bounce. It gives the bears a good enough opportunity to revisit these lows, 210, or maybe even complete the 3-leg down pattern, which would be a retest of the 200 area. It's a bit too soon to call. Things could turn around tomorrow. Who knows? We'll take this one day at a time. But the bulls definitely not liking what happened today, guys. I'll still be very patient and go shopping on my favorite semiconductor companies one by one, but very patiently. And if I'm using short puts, I'll always try to be well below the market and go slow, right? Not commit too much size at one single level. Go slow and wait for the markets to pull down into me for my favorite companies. Moving into the Russell right now, IWM down about 1.02, down another 0.5%. And I was saying the same thing yesterday. Daily uptrend was nice, but it's into resistance. Big weekly resistance, 217 down to roughly 208. Huge area from back there. Resistance, resistance, chop zone, support, right? Support. It was a very big level, guys. And who's in control right now? Well, obviously, it is the bears. So if we lose this daily uptrend, they're still looking for a higher low right now. All is not lost, but anything above 201.69, looking for the higher low for possible trend continuation. If you engulf, you give the bears the chance to lose this, or rather, to commit to a daily downtrend recapture for them. And then, of course, you got to evaluate the weekly bounces here. And the weekly bounces on the Russell, very weak, 35, 33% bounce overall. So this does look like a short possible setup if we get some further pain and follow through and more volatility into next week when we have the onslaught of the reciprocal tariff. So as you can see from most of all our sectors, yeah, we've had very nice daily bounces, daily uptrends. But if they unwind these daily uptrends right now, are the weekly bounces high enough on anything to support the bull's ability to have a nice little rally? Well, they're not in terms of probabilities. Can they still do it? Yeah, but the probabilities right now are not that high. And as a probability guy, I usually tend to go with the probabilities of the highest likelihood, which is why I've been accumulating so much buying power, right? Because I've been slightly cautious of these bounces. Moving into Dow Jones right now. Dow Jones not looking terrible, 0.31% to the downside today. Daily uptrend is still clear as day. And they did clear the resistance range, 42.5 down to about 41.9, yeah? You can see it on the daily you can see it on the daily charts right now. We did close above it yesterday, although now we're pulling back into it. A lot of space above us and the 200-day EMA on the Dow Jones. I would say this index overall is doing a lot better than the SPY. The SPY is slightly below the 200. The QQQs is well below it. The Dow Jones, however, is not. They still have a decent amount of space. Anything above 41,004, looking for a daily higher low for possible further trend continuation thereafter. On the weekly as well, the Dow Jones did not have the worst weekly performance overall of any sector. It is still a weekly downtrend overall, as you can clearly see. And if you're looking for the higher lows, guys, I mean, like it was a 50%, let me just be fair here. It was a 50% bounce for the Dow Jones, so not all that bad. The bulls have equal chances of trying to use this support range below, try to set up for a weekly higher low, and go for the weekly uptrend. We'll see what happens, though. The Dow Jones looking the better out of all the indexes, in my humble opinion. Now moving down to yields, because yields had a big move the last few days. So unfortunately, guys, yields just, or rather the yield, let me go to yields actually. Yields just still on the uptick here. Very, very, very choppy for yields here. We're looking for the eventual weekly lower highs after this huge engulfing move to possibly roll over, right? And on the 20-year yields as well, we are looking for the same pattern, looking for the lower highs into resistance here, and looking for the possible rollover overall. There's a lot of factors going into yields right now. Bond trader speculation, short-term inflation concerns, rate cuts, so many factors in play right now. But one thing's for sure, rates will be coming down decisively over the next 2 years. So if we're trying to accumulate some of these 20-year bonds, guys, you're never too sure where the actual higher low is going to be for this move overall to get that actual uptrend, right? If one thing's for sure, if inflation fears go away or recessionary fears get higher, well, this, of course, is going to start flying a lot more. But right now, it's an accumulation stage for bonds, not any market for some short-term swings right now. Even gold, right? Gold, you would have expected it to outperform today. No, being relatively flat after its, historic not historic, but you know what I mean, right? Outsized 7-8 day in a row rally. Very nice move there on gold. Daily uptrend. Looking for the higher lows. Higher lows are set 3,000. If you flush these, it is daily downtrend and it is weekly consolidation. I will be looking for some of these weekly higher lows on gold. I'll be targeting 29.50 down to roughly 29, the confluence of this resistance, which is now support, and maybe the 12 EMA will be kind and join us in the party as well, so we can get a clean little back test, and maybe that would be a nice entry for a short-term swing trade on gold. Now let's move lastly into Bitcoin. Bitcoin, of course, not really moving a lot today, but still in the context of a nice daily uptrend that is maintained. They haven't lost the daily uptrend. Got to give them that. But we are into resistance as well. 92.3 down to 87,000. And it's common with all the indexes we've just looked at, right? Same concept, daily uptrends, but all of them into huge resistance ranges. This is a very large area of resistance. And when the weekly bears have full control. You have to be wary, guys. A lot of people are taking this as a short swing trade setup, yeah, for the downside play. That being said, the bulls have not lost it, but if you see the rollover, the entry goes here, the stop loss goes above the area that you just broke out from, right? The lower high. And thereafter, guys, you are targeting a swing trade short. Stop loss would have to go about, well, I just showed where the stop loss was, but the take profit would be down here into support 73.8 down to about 67.4. That is the short setup on Bitcoin. There is no long setup right now, not into resistance. A long setup would only come into play if you give me the trend back and recapture this level as support. Prove it to me, right? Then we could talk about swing trades long. But as of right now, not a big fan of buying Bitcoin into resistance. Now, moving on further, we can go into our big tech names, shall we? So looking at Apple. So Apple down about 1% on the day. Not the biggest loss leader in all of big tech, but still a red day for Apple. Daily uptrend is maintained at this current stage, but seems to be rolling over and battling with the 200-day EMA, which is roughly 224.50 right now. Below us is still strong support, 220 all the way down to 210. The bulls have done a great job of protecting this, but who's in control right here? The weekly bears, right? So be very careful if Apple forfeits and sets up a daily downtrend overall. Well, you know the size of the bounce on Apple on the weekly is not the best, right? 38.2, reminiscent of the SPY, reminiscent of the QQQs as well. So just be very cautious. I'm a much bigger fan of waiting for Apple to come to me. If I'm looking to swing trade this one, I need it to flush to the lower levels, guys. 200 down to 190 is where I would rather take some size on Apple, personally speaking, because right now it's just a tale of two different time frames, right? It's weekly downtrend, the daily bulls are in control, and you kind of missed any swing trade opportunities from the lows of daily oversold conditions, right? So now we're kind of in between the two, between resistance and between support. Not a big fan of swing trading this one. And for an add to a long-term portfolio, end of the day, Apple is Apple, but also Apple is expensive right now, almost trading at a 3 peg, very low revenue growth rate as well, guys. End of the day, they have very solid products, a very solid ecosystem. But if I'm to buy Apple, which I had the last time I bought Apple, guys, was like 2022, you know, for long-term portfolio shares, right now it's too expensive for me. I think there's better deals in tech overall, especially considering their growth rate, right? But very solid company nevertheless, even though they have their issues. Moving on to AMD right now, AMD down 4% off of that semiconductor news that plagued the entire index overall. But AMD's had a tremendous rally so far. Not looking terrible, yeah, right? So the daily higher lows are right now set, not looking too bad. Anything above 102, looking for a daily higher low for possible further trend continuation. We'll see if they come down and fill this gap with this little support area down here, 107, where the short-term moving averages are. What I like on AMD, though, is that they were able to really get a weekly upswing going with some good motion. Yeah, it was a weekly downtrend for a long time. Now they've 100% engulfed the move. A lot of space off the lows. Anything above 95, looking for a weekly higher low for possible trend recapture by the bulls. That being said, support, we're still in big support. Yeah, this whole level is support. We never truly made our way out of it, but we never also lost it nevertheless. So that being said, I'll be looking for some maybe downswings. If I can find some short put opportunities below the lows, that'll be very sweet. And I would probably nibble at this point. If you're looking for AMD long-term shares, when I say long-term, I mean 2, 3, 5 years type of thing. Company's still very cheap, guys. Very cheap forward price to earnings, very cheap PEG ratio, fantastic revenue and EPS growth rates. The WACD on the weekly is still looking good even after today overall, right? And they're improving net margins, free cash flow, and revenue and EPS should be having some fantastic run rates in the next few years. Moving on to Amazon right now, down about 2.23%. So Amazon as well had a very nice bounce. Amazon trying eventually to reset the daily uptrend, reacting nicely from the 200 and the 12 EMAs right now. Amazon has built somewhat of a slight shelf. That was previous resistance. It should now be support. And that is roughly 198 down about 196 overall. So we'll see. Can the bulls play defense and get the daily uptrend back? Or was this just a very short-lasted weekly bounce in which we can maybe see a lower high, then a retest of the lows? Well, the bears would definitely be in control of this one, right? Only a 30% bounce. So you would not like to see the bulls lose too much of this move because the rollover to lower lows would be highly likely at that point. I'm a big fan. If I'm looking for short puts on Amazon, I really want to find them again close to daily oversold. If we make some movements during April 2nd, quote unquote, Liberation Day, we get a further downswing on Amazon. Really big fan of picking this one up below 190 for any short puts. And the lower end, if ever we lose this one, we go for a big leg down. Well, I don't think the bears are going to be able to get through this one, guys. 177 down to 150. That's the 2021 highs. At that point, the bears would be, kind of running out of juice. That would be 26 to about 33% down. I'm not saying it's going to go there. I'm just giving like my optimal targets. Here is like a little nibble for me, but here I would probably play it with a lot of size just for, context. Moving on to Google, down about 3.27% today. And all Google, just as they joined the party, unfortunately, they have to get hit to the downside, 3.27% to the downside. Good thing yesterday I fired off some major covered calls on some shares that I had because I just didn't trust the Qs or the SPY, yeah? So Google has the daily uptrend right now, looking for a higher low, anything above 163, looking for a higher low for possible further trend continuation. I mean, they're holding this level fine, 175 down to 163, but you guys know, right? The SPY and QQQs head for one major big level down. We're going to go a little bit lower on Google overall. So pay special attention to the next few days. And can we maintain these short-term trends? Where do I want to play Google with size for a swing trade? Well, probably down here in the lower 150s. Yeah, lower 150s, they say fantastic range. 2021 highs, just like Amazon's, and would be coming into the 26 EMAs. That would be a fantastic area to pick up Google. Well, I mean, already now, it's a fantastic zone. If you're looking to DCA with every paycheck, I mean, guys, it's perfectly fine. The valuation is very manageable if you are a Google investor. The margins are great. The year-over-year cloud revenue growth is also very strong right now. And just overall, a very solid company that just unfortunately is somewhat out of favor. But I would like to play it with more size down here overall, yeah? Because right now, it's looking a little bit dicey to play with some size right here, especially into next week, which is the biggest, catalyst, at least arguably over the next month of time, yeah? Moving on to Meta right now. So Meta down about 2.45%. I mean, not the worst day on Meta, but also, right, they were down with the rest of the market. So we had a sweeping daily downtrend this entire time. Nice engulfing move by Meta. A lot of space off the lows. Anything above 576. Looking for a daily higher low for possible trend recapture by the bulls. Daily MACD is crossing. We'll see how long that lasts. The weekly, though, big engulfing move. If this is the extent of the bounce and the bulls just lose everything because of the tariff threats, well, unfortunately, you know what's going to happen, guys. Such a weak bounce into lower lows. Lower end of support down here is 560. We'll take it one day at a time on Meta. Meta, I mean, for the long term, guys, it's not a terrible price right now at about a 1.9, 1.95 peg. It's a little bit high. Forward price to earnings is somewhat low, right? But it's not the best deal. If you guys want to know where the best deal on Meta is, it's down here, 500 down to 445. I'm not saying it's going to go down there, but if you're asking me where the best deal is, that is undoubtedly where it is. Moving on to Microsoft right now. Microsoft down about 1.31% today as they just cannot get through this area of resistance. 408 down to about 394. We were saying a challenging area it was going to be, and the challenging area it is right now. That being said, the daily bulls are still in control of this little uptrend that we have going right now. The higher lows are set at about 382. Eddie move lower looking for a higher low for possible second attack at this resistance range. But if they lose this and go daily downtrend, and this is the extent of the weekly move, well, who do you think's in control here, guys? Microsoft had a somewhat decent bounce. I'll put the fibs on this, but I have to zoom in because it's very small, and I don't want you guys to use binoculars, right? So only a 40% bounce into resistance. That gives the bears more than a good opportunity to send us right back down to the lows, maybe even lower into support, which stays put 380 down to 365. But as I say, with all these stocks, we'll take it one day at a time. I'm just giving you guys forward clarity on what to look for, right? If all these stocks and all the indexes, sure, if today's just a one-off and we continue the daily uptrends, no problem. We'll keep monitoring the size of the weekly bounces. But notice how much emphasis I put on the weekly bounces, because that's all they are. Who controls the trends in all of these stocks? The bears right now on the weekly timeframes. And until I can take bullish conviction plays with size on these tech names, right? It's fine to nibble, but bullish conviction plays with size, those are all counter trend right now. We cannot be doing those. Moving on to Netflix, down about 2.67% after its nice 2 weeks worth of rally. Also still in a daily uptrend, looking pretty good here. Higher lows on Netflix are set at about 915, looking for a higher low. We do have a little bit of a shelf here, which, if you want me to draw a box, I guess I could draw a small little box right here. This is the zone that the bulls are looking to protect right now. Support after earnings, support, and now resistance, which should be support. We're coming down into it. The moving averages are there as well. We'll take it one day at a time. The bulls do have a lot of space above that higher low. On the weekly timeframes as well, I was telling you guys, right? When you have such a large retracement to the downside, 70 plus retracement of an upswing to the downside, it's very tough to one-shot V-shape this on a weekly time frame. If the bulls are still going to be able to do this and move towards new all-time highs, most likely it will be a two-step process. So we'll stay focused on that two-step process. If it does happen, Netflix down here at about the 950 range, decent valuation. The forward price to earnings is high, but they're growing earnings very quickly, right? So the PEG ratio is not too bad. The free cash flow ratio is not too bad as well. Would I be nibbling into Netflix if I didn't have any shares or I was building a long-term portfolio for the next 3, 4, 5, 10 years? Absolutely. And I would be doing so all throughout a possible Netflix correction to the downside because I absolutely love this company. They're dominating the streaming landscape right now. And now we come into the problem child of today, which was NVIDIA, down 5.74%. This yellow line was the expected move of the week for the options. That being said, daily downtrend right now, clear as day on NVIDIA. Very unfortunate for them. We're never really able to close much above this 200-day EMA at 121 and not even able to get back into resistance, 125 up to 133. Fantastic company, good valuation right now, but just keeps getting hit by all sides. Whenever they get a little bit of a stride rally, there's always something that tends to pull NVIDIA down. And that was the same thing when they were trying to break out from their all-time highs, yeah? Very unfortunate for them. That being said, daily downtrend being underway, what are we looking for here, guys? Well, you know that when we lose a daily uptrend and go daily downtrend, that was the high of the weekly move, and now it's the bear's turn. Now, what was the size of that weekly upswing, yeah? That weekly upswing was 50%. So the bulls have 50% odds of being able to put in a higher low and go for a weekly trend change. Good thing for them. They have a lot of support below them right now. 110 down to roughly 102 is that very large support range that has acted as defense in the past. We will see. Will they be able to protect it once again? Very good question, but I still do like writing puts in this lower area. 110 out of 100. Light though, guys. Light, right? If you can do like 3, 4 NVIDIA contracts, if you have a big account, just one. And then the rest has to come down there. If you ask me where NVIDIA is a screaming deal, it definitely has to be between 95 and 80. I'm not saying it's going to go down there. I'm just saying that's where it would be a screaming deal. Moving on to Tesla. Tesla also getting hit today, 5.58% to the downside. Daily uptrend is still underway for Tesla, but into resistance. 300 down to roughly 260 is that resistance range. The bulls have a lot of space to work with here. Anything above 222, looking for a higher low to possibly continue the daily uptrend. But on the weekly timeframes, who is in control all the time, guys? The weekly bears, yeah? So if you lose this and go into a daily downtrend, the size of this bounce, if that was the high, size of this bounce was only a 25% bounce. What do you guys think is going to happen? Who has the higher likelihood of continuing the trend or changing the trend? Well, the bears have the highest likelihood of continuing the trend to the downside, and the downside test would be back to the lows of 220 into the support range of 200. This area, guys, very challenging zone. Yeah, resistance, resistance, resistance. Up here, it was resistance, support for the bulls, support, and then the first move, 2021, also resistance. Very challenging zone through 300. But we'll take a look at this one day at a time. No swing trades on Tesla for me right now because the long-term bears, the weekly bears, have too much control. I would rather wait for a basing process for all the momentum to kind of die out either way, and then maybe we can look for some swing trades. Moving on to Palantir, down about 4.37%. Palantir had a beautiful rally, guys, in the past few days. Daily uptrend is nice on, I mean, it doesn't look like much, yeah? But a lot of these names, you're talking about like 30% bounces. On some of the big tech names, like 10% bounces, it doesn't look like it, but even NVIDIA, right? Off the lows, how much was this in a week? That was a 17% bounce. I know it doesn't look like it because it never really feels that we're going anywhere, but a lot of these bounces from lows to high were huge bounces, all things considered, right? It doesn't look like much because we're not anywhere close to the all-time highs, but it is what it is, right? So looking for the higher low, anything above 82, looking for a higher low for possible further trend continuation, moving averages below us as well, and support range 84 down to 76. If the bulls lose this into a new daily downtrend, you know that that was the top of the weekly move. That would be a weekly lower high that you might be looking to explore these lows or maybe even set up the weekly downtrend. I'm not going to call it. Still a lot of trading to happen before we can call that. But if that does happen, just want to give you the premise, right? We're going right back down to 72 to about $64. Worst comes to worst on Palantir. But for now, the bulls holding up fine. Still have the daily uptrends, right? Still on this nice weekly upswing. I'm just saying if this is the top of the weekly upswing, it's not good enough. Only 38%, right? So it gives the bears more than enough chances to retest those lows. And now, SOFI SoFi down about 3.47% today and also giving up some of its gains it's had in the recent week. However, the daily uptrend is still maintained. A lot of room above the lows, anything above 11.77, looking for a higher low for possible further attack into the resistance range. But it's a big one, guys. This whole $14 to $16 range, big area of resistance. Yeah, support from all the way back there. And the bulls are in short-term control of the short-term time frames. We cannot forget who controls the weeklies. It is still the bears, yeah? And if this is the end of the daily bounces, and if you go into a daily downtrend, just understand here how much of the size of the weekly move that was. That was about a 50% bounce. It gives the bulls a good chance of saving and going into a new weekly uptrend. However, if we were to revert back to the lows, we're coming back into support 1170 down to about 950, which is where I would like to buy SoFi myself. At $13 or below, guys, the valuation is quite manageable if you have a long-term time horizon, but I'm being very patient for a retest of this range down there, which is where I would love to pick up some more shares of SoFi. On to Uber right now. Uber down about 1.89%. We were saying it was a swing trade back here, guys, right? And it moved directly into our target, which was resistance, $80 down to roughly $78. Pulling back a little bit, still in a daily uptrend, though, looking for a higher low. Anything above 70.55, looking for a higher low for possible further trend continuation and attack this resistance range once more. If ever we roll over for some reason, we are coming into support right now. 73 down to roughly 69 is going to be that range. It was a range that was tested a lot in the recent history, so we'll pay close attention to that. The valuation is very agreeable right now at about a 1 peg on a $70 basis. So I'm a big fan, guys, of Uber. $70 all the way down to about $60. I think it's great for a long-term portfolio overall. Moving on to TSM lastly. Unfortunately, TSM unwinding a lot of work, guys. Stairs up, elevator down. Yeah, 2 weeks of moves undone in one single day. Always sucks when that happens, but it is what it is, right? Daily uptrend is still barely being maintained. Now, of course, we did reject from resistance here, 183 up to 193, which was a very big level for the bears, right? They played off of it almost perfectly. Now coming back into support, 171 down to about 157. Weekly downtrend is maintained. And I was saying, if the bulls lose this, which it looks kind of like, the size of this downswing was pretty big. If we get a lower high into lower low daily downtrend, you know that the weekly downtrend is most likely continuing and could head us into the support range, right? All the way down to lows of 158. TSM, fantastic company on a long-term basis. Very cheap on a forward price to earnings. Very cheap on a PEG ratio and a decent free cash flow yield as well. Tremendous net margins, fantastic company with a lot of competitive advantages. If I'm looking for a swing trade and I'm looking to write puts under the market, I'll be very patient for the next leg down, possibly coming close into maybe daily oversold conditions again. And then I'll be looking to write as far as humanly possible under the market to give myself the best chances of either not being assigned or, if I am assigned, getting the best possible price, yeah? And with that, that is the end of today's video. Quick little recap, guys. Stay focused on the rotations. Do not buy things after they've rallied. Pay special attention to the rotation between growth and value names. Identify your plays, identify the levels, be patient, and wait for the market to pull back into them. Because as we know, in this market environment, there can be volatile days. And if you're patient enough, you can get those opportunities and you do not have to chase at all. So stay focused, guys, and just also just be very careful in terms of your position sizing in current market environments too. But that's the end of today's video. Hopefully you guys enjoyed that. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these every Monday through Friday after the close. And lastly, if you have any questions, please feel free to reach out in the comments on your stocks, your options, or anything in between. I'll be very happy to help you guys out as best as I can without, of course, giving you guys financial advice, because none of this is financial advice anyways, right? So now that's pretty much it for me, guys. And lastly, if you wanted to join a community of like-minded traders such as yourself, where we focus on long-term gains for long-term portfolios, but also in trading, focus on consistent winning strategies, whether you have a lot of risk tolerance or a minimum bit of risk tolerance, in the Discord, there are different trading strategies for all of those things, right? Now, these are all the trades since the inception of the Discord. The green check marks are wins. The red little circles are losses. Very transparent with my wins and my losses, guys. There's trading strategies in here for virtually all account sizes, small, medium, large accounts. We do a lot of the wheel strategy, which is writing puts under the market, call debit spreads, put credit spreads, share swing trades, long-term portfolio creation and building as well, how to grow small accounts into large accounts. There's definitely something for everybody, whether you're conservative or risk-loving, right? And that is pretty much everything for the trade recap. We do live streams Monday through Friday every morning after the open for about 2 hours where I trade live and take all your guys' questions. If you can't be there, don't worry. They are always recorded. You can also ask me all your questions in real time in our chat rooms. I'm very happy to help you guys out all throughout the days too. We also do private videos where I do advanced option strategies and other strategies that I don't really show on YouTube, how to grow small accounts into big accounts, and also depending on your account sizes, in my opinion, which are the best trading strategies to have, and also tips on how you can build long-term, very robust long-term portfolios too. And additionally, guys, you also get access to all my watch list here, all the watch lists that you see here on the right-hand side for options trading or stuff like that. And additionally, you get all my annotations whenever you see technical analysis on the charts or any annotations such as these when I go through earnings on over 100+ different companies. With a click of 2 buttons, you can just copy paste all my watch lists and all the charts just get copied directly from my setups right here. So if those are any things that interest you, the link to the Discord is down below. We would love to have you in there. And if not, I guess I'll see you back on the channel, guys. Pleasure as always. Hope you guys are well. Get some rest tonight, and I'll see you guys back in the markets tomorrow and after the close. So take care. That's it for me. Love you guys as always, and peace.